Correct me if I'm wrong, but back in February, when President Trump threatened tariffs on Canada, the major response seemed to be Canada should fight back using oil, our most important and strategic export. It was a sort of, we'll show them, we'll cut off their oil, and that's about 60% of US imports, 20% of their overall use. The trouble is that losing US oil exports would cost tens of billions of dollars, with Alberta, of course, taking the majority of the loss, the vast majority of the loss. Even at today's low price, keep in mind, Western Canada Canadian Select, which is sold at a discount because the US is our only customer for it. Well, today, let's say the regular West Texas crude oil price is 57 US. We're selling our oil at 45 US. But that still works out to 158 million US per day in revenue we do about 3.5 million barrels a day shipped to the US from Alberta alone. But that's 4.7 US billion a month, nearly 58 billion in revenue per year gone, along with saying goodbye to federal and provincial government royalties and other tax revenue. Now, that would have been the very definition of biting off our nose to spite our face. But of course, the pain would mainly be felt in Alberta, which, by the way, was pretty easy for Eastern Canada to support. So given the cost of cutting off oil to the US, well, we got the immediate response back then to the tariff that across a lot of areas, but specifically with oil, is we got to diversify our markets. We got to sell to other countries, with a huge percent of Canadians supporting a new pipeline. Well, fair enough. But fast forward to today, we haven't diversified our oil export markets. The US is by far our biggest customer. But realistically, how could we diversify away from the US and the 3.5 million barrels per day Alberta sends to them if we can't get the oil to other markets? And that can't happen without a new pipeline on the coast of BC. Now, China's made clear that they'll buy all the oil we can send. But right now, it's only 200,000 barrels per day, and it comes from the Trans Mountain Pipeline. But the pipeline is near capacity. So even a best case scenario, Chinese imports of Canadian oil are going to increase by not much until we have a new pipeline. Korea, Japan, India, Taiwan, Brunei, well, they're all potential customers to help us diversify away from the US if we can get the oil to them. But a new northern pipeline to BC coast is not going to happen because of the strident opposition of BC NDP Premier David Eby and a minority of First Nations bands. And given that Ottawa has made clear it's not going to invoke its constitutional powers to overcome that resistance. Instead, there's now talk of a revival of Keystone Pipeline. But that would create even greater dependency on the US, and our oil would still sell at a discount to world prices that we could get, by the way, if we exported to Asia. Keystone, along with the talk of joining the Golden Dome missile shield, is understandable because it may help get us a deal with the US on trade, considering both energy and military security are priorities for the Trump administration. But as I said, it won't diversify our export markets. But the bigger question is, will we continue to sabotage our most important export, oil, the key commodity in the world? Access to cheap and reliable energy could give Canada's industry and the economy a massive competitive edge. But we've done our best to blow it by prioritizing the climate agenda, despite the fact that Canada's oil sands contribute only 0.15% of global emissions. As former Finance Minister Chrystia Freeland stated, even if every Canadian stopped emitting carbon, we wouldn't even move the dial. That's the context our decisions have to be made in. And slowing our production, by the way, doesn't mean lowering global emissions. It simply means less ethically produced oil because it will take its place. The point is that the current debate over a northern BC pipeline suggests so little has been learned. I mean, the federal and BC governments, joined by a minority of First Nations, seem willing to overlook Canada's worsening economic headwinds, the blatant geopolitical changes, and the parliamentary budget officer's alarm on the fiscal outlook.